Hey Rick, how are you?
Doing well, Jeff. Glad to be here.
Great to see you. Housing 2024, boom or bust. How did we finish out the year?
2024 was a bit of a mixed bag, but if you're a housing market enthusiast, it was probably a little bit depressing. A lot of the forecasts at the beginning of the year were looking at potential for existing home sales to increase from what had been a pretty lackluster year the year before. But in fact, home sales went down a little bit from 23 to 24. We finished the year with just a little over 4 million existing homes sold. That was the lowest number we've seen in about 25 years, even lower than the sales we saw during the Great Recession. Home prices, on the other hand, continued to go up. So it really was kind of a mixed bag in terms of home sales in 24. And obviously, we're hoping for a little bit better number as we get into 2025.
So, as a lender, I'm always concerned about housing appreciation numbers. We have been on a great ride going back to pre-COVID. Can we still continue to expect housing appreciation numbers bail out the lenders?
That's a really good question. The reality is that we're at an all-time record in terms of homeowner equity, somewhere between 35 and 36 trillion dollars in equity, because home prices nationally have gone up between 40 and 50% since 2020. So that really has allowed homeowners to amass just an enormous amount of equity. We've seen the last 2 years, though, home appreciation, home price appreciation, while it's continued to be positive, has slowed down pretty significantly. So as we got to the end of 2024, what we were seeing was home price appreciation right around 4.5% on a year-over-year basis. The prior year, it had been appreciating at about a 6 or 6.5% year-over-year basis. Most of the forecasts I'm seeing for this year, Jeff, call for home prices to go up nationally about 2.5%. And if that holds true, really effectively, home prices won't be going up at all because that's about the rate of inflation. So I think the days of unfettered home price growth are probably behind us, at least for the time being. While mortgage rates are high, affordability is very difficult for most buyers. And we've seen all this price appreciation over the last 5 or 6 years. So will equity or will appreciation continue to bail out lenders? I'm not sure there's much more to bail out from that appreciation, but for most of the country, it looks like we'll continue to see prices at least marginally positive on a year-over-year basis.
Yeah, and we are starting to see on our side some areas of the country that are starting to raise some red flags for us. Some of this is insurance related, other is uh, homeowner movement, other is tax related, but certainly some of these southern real winners of states, Florida, Texas, Arizona, some of these states that have just been on fire for years internally with our data, we're starting to see some flattening, if not declining, year-over-year numbers.
Yeah, so we talk about national numbers a lot, and I mentioned that the forecast for this year is for home prices to go up nationally about 2 or 2.5%. But when you start breaking things down regionally, the numbers get a lot more diverse. The northeastern states, where RCN is headquartered in Connecticut, we still see prices going up at a pretty healthy clip, 4, 5, 6% year over year. If you start to look at the Gulf Coast states, however you want to refer to the Gulf these days, we do see prices going down on a year-over-year basis. And Florida is probably the hardest hit state when it comes to year-over-year home price appreciation. But Florida has a lot of unique problems at the moment. You mentioned insurance costs. Florida has by far the highest insurance premiums in the country. Anecdotally, I can't tell you how many people I've talked to recently whose insurance bills on a monthly basis are actually higher than their mortgages. Florida home prices have gone up along with the rest of the country over the last few years. So property taxes have also gone up as those home prices have gone up. So all those people who got into a 30-year fixed rate loan who thought they knew what their monthly housing cost was going to be for the next 30 years are having some serious sticker shock. And that's particularly true in states like Florida, where you've had these extreme weather events. But also in Florida, you have new assessments on condominium buildings, condominium complexes, because of what happened a couple of years ago with that collapse of a condominium that killed a number of people. So now there's increased insurance, there's increased reserves, and there's a lot of people who are seeing their monthly condo fees double year over year. And in a state with a very high percentage of retirees who are on fixed incomes, that becomes a real problem. So we're seeing a lot of properties coming to market in Florida for affordability issues. And it's really ironic, Jeff, that historically, when our industry has talked about affordability, it's how much home a first-time buyer could afford. And now suddenly we're looking at affordability as what a current homeowner can afford to keep, whether they can afford to stay in their house, as these ancillary costs like taxes and insurance have skyrocketed in the last few years.
So when we think about affordability, there has been a pretty good amount of new construction, especially in some of the southern markets over the past few years. Do we expect home appreciation to continue with new construction, or where's that going to end up this year?
Well, the gap between the median price of an existing home and the median price of a new home is about as narrow as I remember ever seeing it. So new home prices have actually come down from market peak back in 2022, fairly significantly. It's not a crash, but we've seen prices come down a bit over the last few years. On the other hand, existing home prices continue to go up year over year. So that's why that gap is narrowing. So I think the builders have been able to adjust what they're building in terms of the quality of the materials and the finishes, in terms of the size of the properties they're building, and candidly, in terms of how expensive the markets in which they're building are. And because of that, they've been able to build these homes across the South at relatively competitive prices. We do see in the last few months that the average sale price of a new home has gone up month over month and year over year. So we might have bottomed out in terms of new home price depreciation. But there's an X factor at play here, Jeff, and you're familiar with what it is. It's the threat of tariffs on imported goods. We're very reliant on, for example, lumber from Canada, on drywall from China. And the National Association of Home Builders has estimated that if these tariffs go through as planned and stick, the cost of construction in the average new home will go up by five to $10,000 just because of those increased materials costs. So I think it's likely that we're going to continue to see home prices go up in the new home arena. Maybe not as dramatically as we've seen in past cycles, but there's going to be pressure on the builders to be able to make their margins with these increased costs.
Well, boom or bust, it sounds like a mixed bag. Thanks so much, Rick.